Sometimes, and I've had this happen with a client recently, they had wage and income statements that went out, and the person that issued those sent them electronically. So to no fault of their own, the client did not turn in that information. So what happened is 2 years later, the IRS reaches out and says, hey, you omitted income. You actually owe this much on the income. And in addition to that, you have an accuracy related penalty.
Welcome to the Tax Relief with Timalyn Bowens podcast. Are you behind on taxes? Is the IRS threatening you or your business? Are you overwhelmed and confused about how to resolve your tax issues? Let's join Timalyn as she explains your options and how she may be able to help. Timalyn Bowens is America's favorite EA.
Hey family, welcome to episode 40 of the Tax Relief with Timalyn Bowens podcast. Episode 40. Just excuse me for a little bit because my mind is blown. When I launched this podcast in April of 2022, I never envisioned stopping, but at the same time, I never envisioned the amount of support that I would get from taxpayers just like you, supporting me in my mission to fill the tax literacy gap one taxpayer at a time. It seriously blows my mind to see the subscribers and support that I have on the different platforms, like on Spotify. I see you guys on there, on iTunes, on Audible, all the platforms I didn't name. I truly, truly appreciate you. I appreciate every listen and download, every follow, every subscription, and I appreciate every like and share. I appreciate you entrusting me to give you this education for preventative care for back taxes, back tax issues, and just tax relief in general. Thank you so much for rocking with me through this process. I would not have been able to make it to episode 40 if it weren't for you. So from the bottom of my heart, thank you. Now, if you aren't subscribed to any of those platforms, I don't take it personally, but will you do me a favor? Will you make sure that after you listen to an episode that you not only subscribe to where you're listening, but also leave me a review? When you leave me a review, that helps me in the rankings and it helps me to reach more people, which means you're helping me push that mission to fill the tax literacy gap one taxpayer at a time. And when you help me do that, I promise I will continue to give you relevant tax information. All right. Now, this is Tax Relief with Timalyn Bowens. So yes, it is going to be things that deal with back taxes, but also preventative care so that you don't run into those back tax issues, because back taxes shouldn't ruin your life. Right? Right. So in today's episode, I'm going to talk about something that almost every taxpayer has encountered, whether they actually realize they've encountered it or not. Now, come in with me. Have you ever filed your tax return, whether you prepared it yourself or you had a professional prepare it? And then you realize something doesn't quite look right. It looks like something was left off. Uh-oh, you made a mistake on your taxes. What are your options? Well, one, you could wait and see if the IRS catches it and makes the correction for you. Or number two, you can file a tax amendment. And that's what episode 40 is going to be all about. We are talking about what is a tax amendment. In this episode, not only am I going to tell you what it is, I'm going to tell you why you would file an amendment and when you should file an amendment. All right. So remember, everything that I talk about here at Tax Relief with Timalyn Bowens is going to be from the federal point of view. And in today's episode, not just federal, but from the individual point of view. All right, so we're going to talk about the 1040X. That is the form that you file to do an individual tax return amendment. Now, with that being said, there is a 1065X, which is an amendment for a partnership return. There is an 1120X, which is an amendment for corporations, an 1120SX for S corps. But I'm not diving deep into that today. The same general concept, but there are going to be a few differences. So just keep that in mind as you're listening. This is focusing mainly on the individual amended return. Okay? So one of the things, if you were looking this up right now while I'm going over it, I want to remind you that this form is now a continuous use form. Okay? So what that means is currently the IRS is not updating this form every year. Okay? If you have a 2020 return or later, that means it's going to be the same tax form. You're just going to edit the tax year that you need to file for it. All right. So if you're trying to amend your 2023 and you can't find the 2023, 2022 form, it's all good. All right. Because it's a continuous use form. So you'll see 2020 on there. So don't freak out about it. All right. As I said in the example when I asked you, have you ever made a mistake on your return? Or if you're a tax professional listening to this, and yes, I know you guys listen too, because you slide into my DMs and let me know. I appreciate you guys rocking with me too. Have you ever made a mistake on a client's return? Or you got a new client, and when you look at the prior year return, you see that mistake. Sometimes doing the 1040X for the amendment can save them money, or still saving them money, but reducing any penalties and interest they have because maybe there is a deduction that was missed. Maybe we have a credit that they qualified and it was missed. One situation where I saw this quite frequently during our COVID years is where we had business owners who didn't do Form 7202. This was the sick and paid leave credit. During our COVID years, which, technically, are we out of them? But anyway, the years that the IRS said that we could use them, 2020 and 21, I saw business owners who had COVID and were unable to work, or they were in the type of business where their business was shut down due to COVID and they couldn't work. And they qualified for the sick and paid leave credit, but they didn't actually take it. That is the perfect example of when you would do an amendment. On the 1040X, we, of course, would report all of the information that's on the original return, right? Then we would add a 7202, and on the 1040X, we would show the change to the return that was made from this additional form. Then we show how that credit would impact the return, okay? So let me back up a little bit. With this form, 1040X, is to correct Form 1040 or 1040SR, which is used for our seniors, or 1040-NR, which is used for our non-residents. We can use this, as I said earlier, to make adjustments for any credits that were missed, any deductions that were missed. They can be used to claim a carryback due to a loss or unused credit. It's typically going to be for our business owners, right? And they can be used to make certain elections after the prescribed deadline. All right. Now, sometimes this is a genuine mistake and like you just didn't know. That is fine. The 1040X can be used for that. Now, if you made a math mistake in calculating a credit or a deduction, typically the IRS is going to correct that for you. But if enough time has gone by and you're like, I don't think they're going to correct it, you would want to file a 1040X to make that correction yourself. Now, sometimes, and I've had this happen with a client recently, they had wage and income statements that went out, and the person that issued those sent them electronically. So to no fault of their own, the client did not turn in that information. So what happened is 2 years later, the IRS reaches out and says, hey, you omitted income. You actually owe this much on the income. And in addition to that, you have an accuracy-related penalty. Now, accuracy-related penalties hurt. And I'm not going to get into it right now because I have a whole another episode where I covered accuracy-related penalties. You can go catch that. Click on the link in the notes, okay? But for this client, they were like, well, should we just pay this? What should we do? And I took a look at it and I saw that not only was there income, but there was also withholding. Let me tell you something. When the IRS adjusts something for you because you have additional income, they only put in the parts, let me not say only, the majority of time, they only put in the parts that are going to benefit them, okay? So yes, my client absolutely did understate their income because this was omitted. However, by doing an amendment, 1, we were able to put in the withholding. 2, because it was additional income, this put my client over the threshold with their Social Security and Medicare. So they should have actually gotten a credit for that. With that credit, I don't know if you guys remember when I did the Tax Basics 101 episode, you can go check that one out too. When you have a credit, that goes against any tax that you owe dollar for dollar. So in this situation, the IRS only added additional income, but they didn't make an adjustment for that credit, and they didn't make an adjustment for the withholding. So did the client ultimately end up owing more? Yes. But did they owe as much as the IRS said they owed? No. And the way that I was able to go and improve this for the client and save them some money on this was by doing an amended tax return. All right. So that is one of the reasons why you would want to do it. Because in addition to that, the accuracy related penalty still existed, but it was lowered. And because that was lowered, the interest was also lowered. All right. So who wants to miss out on a credit or deduction, right? Nobody. You have to make sure that once you realize there's a mistake, that you move timely. All right. So you must, if you're doing this for a credit or refund, you must file Form 1040X within 3 years after the date you filed your original return, or within 2 years after the date you paid the tax, whichever one is later. Now, that 3 years is going to include extensions. All right. So let's say that your 2020 return was extended because we had so many extensions that year, right? But let's just say your 2020 return was extended to October of 2021. All right. So for you to file an amendment on that 2020 tax return, you would need to file it by October of 2024. Now, excuse me, let's say that you had a balance due that year. All right. And we're pushing into the future. You don't have the balance paid by October 24. You actually get the balance paid by, let's say, June of 2025, right? Because of the rules with amendments, 3 years after the original return or within 2 years after the date you paid, because that balance was not paid within that 3 years it was after, you actually have 2 years after the balance is paid to do an amendment. Why the IRS gives us grace right here and not with other things, I'm not sure, but I appreciate the grace. So that means if you have a balance, you have a little bit more time to catch the mistake in order to make the amendment. So for my people that I mentioned that missed the sick paid leave credit, if they had a balance in those years and they did not file to claim the credit, if the balance hasn't been paid, they still have time to file an amendment and claim the credit. And the credit will go towards that balance they owe, dollar for dollar. All right. Now, if you're listening to this as a business owner, or you're listening to this as a tax professional, and you're like, oh, I have clients that qualify for that, let me go make sure they took it. Or you were a business owner during 2020, 2021, COVID affected you being able to work and make income, or the stay-at-home orders did. You want to go check out that credit, all right? So in the notes, I'm going to actually leave a link. I wrote an article for GoodRx about the credit, and I also wrote one at Bowens Tax Solutions about the credit as well. So if you think that you qualified, check those articles out most definitely so you can get that money to go towards whatever liability you may have, okay? All righty. Now, with the amendment, something that you want to take a look at, but I'm not going to go into too much detail. Typically, if there's a mistake on the federal return, it is going to go down and affect your state return as well. And if you live in a place where you have to file local returns, it's going to also affect that. You want to make sure that if you have something to be corrected on the federal return, you're also checking out the state. So, for example, I live in the state of Kentucky. Our individual tax form is the 740. I would want to make sure that if my 1040 is affected and I file a 1040X, I probably need to file a 740X as well. Okay. Now, on the 1040X, it doesn't look quite like a 1040. You're going to have 3 different columns. And in column 1, you're going to show all of the numbers from the original return. All right. Column 3, which is also column C on the form, is going to show what the corrected amount is. And then column B is going to show the difference. So when you were actually doing this as a professional, if you're doing DIY, go have at it, you should be able to see the actual monetary income change on the return as you're going through. All right. Now, you all know I don't like to judge your tax competency. However, in situations where we have a simple W-2 return, you may be able to do this DIY. The very beautiful thing about amended returns from 2020 out, you can actually e-file those. So if you did your return in TurboTax, H&RBlock.com, whatever you did it in, you should be able to go into that software and select Form 1040X. Make sure you're inputting whatever was missing, and the 1040X should be populated for you. Same thing, if you are a tax professional, should be able to put in the 1040X. And if you need help, your software can walk you through the process of how to populate that form. Now, it's tricky if you aren't the original preparer of the return and you're trying to do this. Okay, so just keep that in mind, that that's somewhat of a way to check your work, is to see if the difference that's coming out on the 1040X actually equals the amount of income that you added or took out from the return. All right. Another common instance where I see people do a 1040X, and this again is a credit, is if we have somebody that did or didn't claim their child and they need to add that on, right? So we add Form 8812 so we could claim that credit, and then we would show that on the 1040X. Now, one more thing I want to talk about is with the injured spouse relief. If you did injured spouse relief on your initial return, you want to make sure that when you do the 1040X, you also do injured spouse relief if a credit or a refund is due from the 1040X. Okay. Otherwise, whatever credit or refund is due is going to go towards that spouse's debt. All right. The spouse that owes, whether it be the back taxes, the child support, back student loans, make sure that you're still protecting yourself. If you're not familiar with what the injured spouse form is, you can check it out on my YouTube channel, where I also did a podcast episode that you can check out here. Now, I've been on here. I don't want to take up too much of your time, but I just want to reiterate, because sometimes when people are looking for tax relief, they think, oh my goodness, I have to call the IRS. I have to negotiate all of this. But sometimes doing a simple tax amendment can be what lowers your tax liability. Now, with that being said, if you are a business owner and you intentionally did not put deductions or credits so that you qualify for a mortgage, a home loan, and then you decide to use an amended return, a 1040X, to lower your tax liability so that you can afford it, but you use the previous return to get a loan, I'm going to let you know right now, I probably would not take your case to help you negotiate your back tax debt, and here's why. That, my friends, is mortgage fraud. You can't tell somebody that you make a certain amount of money in order to have them loan you money and then turn around and tell the IRS, hey, I really didn't make that much. This is why these different systems work together. And not only are you going to get smacked by the IRS, you're also going to be in legal trouble. All right. Because like I said, that's mortgage fraud. So you want to make sure that you are using the 1040X if it truly applies to you. All right. We can't do it to play different games, to get different loans, to qualify for this, to qualify for that, because I don't want to go to jail with you for mortgage fraud. All right. So just keep that in mind, because I hear people say that for business owners when they're trying to get different loans, whether it be for home or business, like, hey, just don't put your deductions once you get the loan, go back and do a 1040X. No. It's illegal. Okay. If you got to go make some more money so you can get that loan, go do that. Have some grit, put some more hard work in. But trust me, committing mortgage fraud is not worth it at all. Now, I'm going to wrap it up here. I hope you stayed around to the end. If this episode was helpful, please don't forget, make sure that you are subscribed on whatever platform you're listening to. Leave me a review. And after 40 episodes, I think the least that I can do is get some input from you. Let me know, what other type of tax relief topics would you like for me to cover right here on the podcast? You can do this by going to my website, americasfavoritea.com, and going to the Contact Us page. Once you fill that out, just let me know what kind of episodes you'd like to hear, and I'll take that in consideration, because this is all part of me filling the tax literacy gap, one taxpayer at a time. And if you owe taxes, it's me helping you out, because back taxes shouldn't ruin your life.
I'd like to thank you for taking the time to listen today. I'd like to thank Jim Ray Consulting Services for helping me get this message out to you. I hope you found the information helpful. Did you know 1 in 50 people have a tax problem? Please share this episode with your friends and family, because you never know who may need help. Again, thanks for listening. Hey, just as a reminder, this podcast is for informational and educational purposes only. It provides a framework and possible solutions for solving your tax problems, but it is not legally binding. Please consult your tax professional regarding your specific tax situation.